Good morning. It's Tuesday, August 7th, about 6 a.m. Central Time. Overnight, the precious metals are mixed after yesterday's consolidation. You have December gold up $5 at $24.36. September silver unchanged at $27.22. The problem with the silver market, and specifically yesterday in this overnight session here, because in my opinion silver should be a bit higher with risk assets across the board all rising, is because of the September copper contract continuing to slump. So copper's down about $4.90 at $397.85 last, and what that's doing is it's weighing in on the gold silver ratio. So we're coming back up to these levels that we're seeing in most of early 2024, kind of that 88 to 1 on up to 92 to 1, and we're currently at 89.5 to 1 on the gold silver ratio. So getting back to the markets here, the dip buyers, they stepped into the market on Tuesday as safe haven assets such as treasuries and the gold market slumped. That's why we didn't get much of a bang here yesterday on the silver market. I thought that we would have been a little bit higher here, that 20 to 30 cent higher on the silver market, but we slid back down. We bounced back off near that 200-day moving average, and that's been a key level that I've identified for a lot of people out here, a lot of the clients, that's an area of interest for us for long-term value. Now, yesterday the Dow Jones Industrial Average added 0.8 of a basis point, and then also the Nasdaq and the S&P 500 closed up 1%. So with fewer economic data releases scheduled over the next couple weeks, it's going to be very difficult to change the narrative. So expect this volatility to continue. Today we'll see a 10-year auction at 1 p.m. and then we'll also see the Federal Reserve report consumer credit data for June. So total consumer credit rose to $5.06 trillion, and the revolving credit, mainly credit card debt, is increased about 6.3%. Those are what the expectations are for, and it's very interesting. Now, overnight, we've got more of this risk-on type vibe here with U.S. equities. The S&P 500 up 60 points, the Nasdaq up 260, the Dow up 300. And the reason behind that is the Bank of Japan, their deputy governor, indicated that there will be no more interest rate hikes until stability is found in their stock market. So that's another dovish signal. The reaction puts the yen on the defensive, and overnight futures are down about 1.5%. So in yen terms, that's down about 108 points here. So it's sending traders back into those risk assets. Other markets to note, we are seeing Bitcoin 57,500, so that's continuing to come up. Many people were adding those positions on the futures contracts. And then crude oil futures, which people are finding some area interest in, which have been slumping. We've got things heating back up in the Middle East right now. So crude oil futures up about $1 as of this recording. You go to the CME's Fed Watch tool. So now it's starting to balance back out, where when we went to that panic on Monday, it was like 100% chance that they were cutting 50 basis points. Tuesday, yesterday, we get some stability. It comes down a bit. It was 25-75, 25% chance that they only cut, sorry if I said raise, cut a quarter basis point. And then now it is getting a little bit more leveled out here. So it's 36.5% chance that they cut 25 basis points, 63.5% chance that they cut 50 basis points. Watch by the end of this week, if no shoe drops, that it's going to be closer to 50-50. So we'll have to continue to monitor that. Now, getting into the markets here, the gold market still in this kind of sideways to bullish type trade. The reason why it's bullish is because of the fact that we've seen higher lows. And when I speak bullish, bearish, it's technically, it's not based on any kind of feelings whatsoever. The reason why we're bullish is we're seeing higher lows. So if you go back to June, you're going to see kind of that low was around 23.50. Then you go back to, after we make new all-time highs, we consolidate back down in July, around July 25th, low 23.99. Now this low here that we saw on Monday, 24.03. So just $50 increments lower. So you want to connect those on the charts if you're drawing trend lines. Now the key level of support here, and we've been unable to close below it, which is great, which is the 50-day moving average at 24.22. I think that's your first major level of support. Below that's going to be psychological 2,400 down to 23.96. You want to see the market really take out yesterday's high, which is 24.59. That'll allow the market to attack the trend reversal point at 24.82. Now again, the problem with silver is copper. Just put up a copper chart. You'll see the problem with that market. Remember, silver is 54% an industrial metal. China is the main consumer of copper, and then also the silver market. So your key level support, again, on the silver market, is going to be your 200-day moving average, but it's got a lot of work to do. It's really got to retrace back the August 5th sell-off. The high on that would be 28 28.81, and then you want to get back above 29.08, which is the July 25th sell-off, and then you could start attacking the 50-day moving average as a trend reversal point. But then it will just take that market back to a neutral trend because of the fact that the flip side of the gold market, the silver market, it's seen a series of lower highs and lower lows on the market, but I think that that's all coming to an end. So you got any questions, give me a call. Again, I do a real nice write-up, a real nice presentation every day in the Metals Edge. If you scroll down below this video, you'll see a place where you can subscribe to a free 2-week trial of that. And if you want any other additional information, if you want specific trade recommendations, options, things like that, just give me a buzz. I'll give you a couple ideas here, a couple things that we're looking at. Remember my number, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.